All right, good afternoon, everyone. Let's review Thursday, April 23rd, 2020. We're looking at the S&P 500 futures market. My daily, I believe I started out the video this morning talking about how I didn't see anything that was too obvious here, except for the fact that we were bouncing off a 38% retracement zone of this leg here. It wasn't the whole leg, it was this smaller leg. So that was somewhat of a bullish case. And when I came over to my 4-hour, I noticed that we could potentially have a divergence. But what I did say, and I'm glad I used this as an example, this could continue carrying through, especially the fact that we're in this really nice uptrend. So we're counter trend trading it. There's definitely potential for things to push through and for these divergences to be negated. And I said, look out, we're making this divergence based on this high here at 2808. So if we come up and we break 2808, there's no longer any divergence to be using, because now we have a lower high to a higher high on RVI, a lower high and a higher high on price. No divergence. And that's pretty much what happened, right? It kept carrying through, and then we finally got a high and at least somewhat of an apex on RVI here. Right, so it ended up carrying through, and this 2808 I ended up marking on my smaller time frame charts. So I was looking at that into the open, and the open was like right there. It was right around 2808, and we busted through. So that was a great opportunity to take that long. And if you look at the really small time frames, it actually busted through and then came right back to it, and there was a great chance to get in on the move. This 21 was an area I also talked about this morning in the video. If you look at the whole leg down and you draw your fib, your 61.8 retracement, which is a very highly reactive area, was lining up exactly with support from back here last Friday. So when we came back up here, I was pretty sure that this was going to be a nice resistance area. If you look at it on the smaller time frames, let's see, right here on the 9-minute, it went right to it, to the tick, 221, right, high of 28.21, and we pulled back like 10-12 points here. So this was a really good trade. And what I like the most about it is the fact that it pulled back right to 2808. So if I go to my 3-minute, so here we are, there's the launch, the open was like right here, so we punched right through 808. There's your great signal that we're to go long, especially because I said we were bouncing off the 38 on the daily, so that was also bullish. So there's the break, and then 21 was up here. So when we got up here, this was a great short. And then we came right back to 808, and we tried 3 times to bust through, and it didn't. So that's another great indication that we want to see higher. And sure enough, we made some new highs here. We busted through the 61.8. And I'm not even sure, I didn't have any level marked. Like when we reached the top there, I didn't really have any indication that that was going to be the top at all. You can make the case, I mean, once it formed, right, and then this new candle formed and we started pulling back, you got like nice divergence off of it, so you could have taken it short. But again, if you put it into the context of the day and you look, like, you can't see the right hand side of the chart, look at how aggressive, I mean, look at how strong the bulls were here, just pushing. I would think it was going to be a little hard to actually short that just based off of a divergence signal. If there were levels and maybe my 200 moving average and stuff like that, that would give me more confidence in it. But that's basically what I saw today, guys, and I hope you took some of my advice this morning to take 808 long, because that was a really good trade. Have a good one, guys. Stay nimble.